and my focus will be to talk about international downstream. This is the area where KPI operates under. As some of you might know, KPI is Kuwait Petroleum International, is the downstream arm of KPC outside Kuwait. KPC owns two companies who operate outside Kuwait, one upstream, the other one is downstream. The upstream company is KUFPEC, Kuwait Foreign Exploration Company. KPI, which was formed more than, I would say, 28 years ago, the main focus of formation of this company was to provide an outlet for all the petroleum products which were to be produced from revamped Mina Ahmadi and Mina Abdallah refineries, which were revamped during I call them the golden age of refining development, which was the 80s. So these were supposed to provide an outlet for the diesels, the gasoline, the jet fuels that were to be produced from those revamped refineries. It was the concept from well to pump. That was the concept or the strategy which was to pursue during the 80s. Today, KPI owns two European refineries. One of them in Rotterdam is 80,000 barrels per day refinery. The second one is in Sicily, in Italy, jointly owned with ENI, complex 200,000 barrels per day refinery. KPI has 4 lube blending plants, extensive research and development. Who is doing the flipping of the... Okay, you will do that? Okay, how does this work? No, it's not gone. Okay, now it's fine. Thank you. Extensive research and development laboratories, again in Holland. More than 4,400 consumer retail stations, as well as 560 commercial retail stations in 21 countries. This is a new sales channels it was new at the time when it was introduced by KPI to supply diesel to truck drivers, and a global network of more than 51 lubricant distributors in 46 countries, aviation supply to more than 48 airports in 11 countries. Size of KPI, more than 370,000 barrels per day, a turnover of more than 16 billion, and more than 4,450 full-time employees, and with a total assets of $7.8 billion. KPI's strategy was recently about 2 years ago, was updated along with all the strategies of KPC. We were part of the downstream strategy development. We actually integrated our strategy with our colleagues in KMPC as well as CAFCO, and we produce our strategy, which is in line with KPC strategy. The strategy focuses on, for international refining, is to provide a secure outlet for Kuwaiti hydrocarbon, namely Kuwaiti crude. The projects that we will embark on, they must be viable, so we will only invest in projects that are economically viable with clear returns. Our focus will be in the growth markets, and we will always pursue an integrated model. The integrated model include building a refinery, petchem, and marketing assets. We will not get into only refining assets because this has proven to be non-sustainable in the long term. As part of our business model, we'll always partner with an IOC again, to manage the risk of the investment. KPI's focus has shifted. It used to be focused in Europe, as I explained 28 years ago. Now it is shifting into growth market, which is Asia. We will continue, however, to strengthen our assets in Europe to make them profitable, cost-efficient, and sustainable on the long term. But it is not our plan to grow substantially in the European market. And reasons, the numbers speak louder than words. If you notice, again, the graphs show that, and most of you are probably familiar with this, is demand for petroleum product actually has fallen in Europe. It has fallen by more than 1.2 million barrels since 2006. And this was mainly due to a more efficient car fleet that is being introduced in the European market. North America, which was importing European products, actually switched to exporting to Europe. Also, high levels of product imports from Russia, Middle East, and India depressed product prices. A very competitive and it's also a declining market as we see it in Europe. What are the prospects for expanding in Europe? Expanding in refining market. The overall demand is expected to continue to decline, and we think it is going to decline about 1% per year. And the worst case scenario is what we call the nightmare scenario, which we have actually evaluated, which is the breakup of the euro. We are also seeing that Russia is exporting a lot of their products into Europe, but this could reverse in case they change the tax law in the Russian market. We find also, having said that some European refineries with niche products and proper product mix, they are making an acceptable return for such a competitive environment. We are seeing also many refineries are closing, are potential for closure or conversion to terminal. So any refinery that remains will reap the benefits once the European economy recovers and we start getting some reasonable refining margins. In contrast to Europe, we are seeing a different picture in Asia. Asia is the growth story of the whole world, and there are some specific countries which contributes to the biggest growth in Asia. We think that the Asian vehicle fleet will grow by 5.5% by year 2016, passenger cars by 7.9%, and commercial vehicles by about 4%. Also, the economic growth creates demand for gas oil, aviation fuel, as well as LPG. Look at the numbers in some of the market we are focused on. Granted, this is starting from a low base, but the numbers are very high. The growth numbers are very high, as the graphs show. We see similar growth in China, but with a different scale reflecting the size of the country.